What makes a layer 1 blockchain unique from its competitors? Is it how scalable it is? Is it possibly how secure it is? Or what about how decentralized it may be? Or is it perhaps that its virtual machine, I don't know, maybe supports a wide array of new and exciting decentralized applications? Well, you'd be surprised to hear that what fundamentally makes one blockchain more successful than the next isn't always due to the same reasons a lot of us would actually think. Now, if we take for a second the most obvious indicators we're all probably very familiar with, like the team, investors, partners, usability, and technical execution, like some of those aforementioned aspects, they're all important, yes, and they are, of course, all worth looking into, and they can all obviously help gauge whether a cryptocurrency is so-called good or bad. But let's just stop and think about it for a second. You know, why will some protocols grow much larger than their competitors who are far more impressive in, I don't know, let's just say all of these departments? Well, to put it nice and simply, it's got a lot to do with something called the ecosystem. Now, as you should probably be aware, investing in a layer 1 is somewhat similar sort of to fiat currency. If I was to give an example, if inflation goes parabolic, or an economic boom happens within a nation's economy, then your fiat will obviously be worth a lot more or less depending on that particular situation. Now, in relation to a layer 1 like Algorand, for example, you can view it as a type of fiat currency that represents the success of the protocol itself and that ecosystem that I was talking to you about a second ago that subsequently obviously builds on top of the layer 1. Now, as a result, no matter how interesting a project may tell you it is, or how many of the world's firsts it claims to have, we absolutely must look beyond the blockchain itself and into its current, future, or even potentially non-existent ecosystem to understand its future potential. Now, fortunately for Algorand and her supporters, many of these indicators are present, which is why I'm so excited to explore the technical and fundamental aspects, as well as the ecosystem in finer details in this video. But before I do, I'd like to mention today's sponsor. It's you. I'd really appreciate you sponsoring this video by taking a very quick second to hit the like button, and if you're really feeling up to it, subscribing for more reviews like this. As you can tell, this video is a very long one, and trust me when I say it took me weeks to create.
Imagine how hard it's been for you, and they really empathize.
And on that note, guys, welcome back to a brand new video. My name is Kyron from No BS Crypto, and if you are new around here, I would like to say welcome, and if you are a returning subscriber, thanks for coming back and sticking around and continuing to support me. For those who don't know, my channel is designed to give you the most comprehensive overviews of cryptocurrency projects, so you're of course the most informed when making your investment decisions. Now on my channel, guys, you're only going to ever see objective reviews with fundamental analysis to back everything up. So let's briefly begin with the ecosystem, starting with a quick introduction from some of Algorand's key supporters and also influencers.
Hey, my name's Ian, or Poly.algo. I'm just a user of Algorand. Could barely call myself an influencer. I've written a few Twitter threads, but that's about it. It's just, you know, it's cheap, it's fast, and it always works. You know, I've used a couple other blockchains. I've sent like a few Ethereum transactions. You know, back when it was like 3,000, I was like, why am I paying $35 to transfer this to BlockFi to get like 5%? And then it has to sit there for like 6 months just to pay for the gas fee. So it's like, you know, just putting it into AlgoFi, you know, just a lot easier. So
hello guys. So I've got some questions here to answer. Basically, I'm just a holder. I invested very early stages, and I really like the system, so I keep investing weekly and monthly. The community, the way that is split between the Algorand and Algorand Foundation, and the way that people communicate to each other in the system. The projects are simply amazing.
Hi, so my name is Elisa. I'm 21 years old and I'm from Israel. So I guess that I'm kind of influencer, content creator, but mostly I'm just an Algorand fan, and I love the blockchain and I love to help others, so I make these videos. Definitely the community. We have so many great people here, and you can reach almost anyone and they'll help you and explain you. And everyone here is just so nice.
I want to personally thank everyone who took the time to answer my questions, and I hope everyone watching thanks those guys by giving them a follow or a shout out in some way or another. Now, it's important when researching a project to understand why the hell retail investors or the end users would be so interested in joining the ecosystem, using their dApps, and in some cases, incentivizing others to do so, like these lovely people. Now, like this small sample of some of Algorand's key supporters, we need to understand what goes into making a protocol so enjoyable for its users. Now, I personally like to look at things like the public Telegram and Discord servers to gauge an overall sentiment and engagement among the strongest supporters in that particular community. And then I go ahead and like to use the Twitter engagement and following for a broader sentiment, and double check this with tools I use later in the video, like Lunar Crush. So, as important as the testimonials from these wonderful people were, we still need to track sentiment from the largest possible sample. So, more on this very, very soon. Now, for those who don't know, Algorand is one of the more promising blockchains in the space right now, and that's something I would wholeheartedly actually agree with. It considers itself the most sustainable blockchain, which we're going to see if that's correct in a second. It's considered capable of sustaining institutional demand and national services, and it defeats the so-called scalability trilemma, well known as a blockchain's worst nightmare, imposed by one of crypto's forefathers, Vitalik Buterin. Hang on. Buterin.
Mistake is hard, but what I do know is when we learn a shard, we'll change the whole game, though.
Algorand plans to establish what's called a borderless economy, which is more or less a digital economy where anything of value can be traded between one or more parties without friction of the current financial networks. Now, with cheap fees, instant finality, and fast TPS, at least kind of for the current state of blockchains, negative carbon emissions, and a thriving ecosystem, we're about to see what Algorand has to offer. Today, I'm going to break down Algorand using the L1 Flywheel you can see on your screen now. Now, for those of you who are unfamiliar with the Flywheel, it gives an overall idea of what makes a layer 1 protocol tick, starting with a meme right through to creating the entire ecosystem. Now, as a general rule of thumb, a retail investor isn't going to want to be a part of an ecosystem, at least in perpetuity, if the flywheel isn't moving, of course, in a succinct manner. Now, if all areas are flowing effectively, then the end users are going to be happy and the community will be noticeably growing, of course. Now, one kink in this sort of flywheel and an almost domino type effect will definitely play out, resulting in the end users declining by way of unique wallet addresses or the social platform engagement. Now, I know this is a super long video, so if you're short on time, please feel free to use the timestamps down below to jump to whatever section you are the most interested in. If not, buckle up, let's begin. So let's start off with the founders and the core team. Now, as many avid viewers and future course purchasers are going to know, this is literally the most important aspect in any project, period. A team drives the ship, and with no team, or better yet, a captain capable of controlling the onslaught of technical swells, treacherous AMA rip currents, dreaded calls with shark investors, and still trying to entertain progressive ideas, then the ship may as well not even leave the dock. I hope you guys like that analogy. Now, Silvo Micali, Algorand's founder, has some mind-bending accolades like a PhD degree in computer science, winning the 2012 Turing Award, which, by the way, is literally the equivalent of the Academy Awards or the Nobel Prize for computer science. He has also won the Gödel Prize in 1993 and received the RSA Award for Mathematics in 2004. But I know for most of you, those awards are going to mean literally nothing, and if I'm going to be perfectly honest, they require Googling from me as well. So something a lot more of you can relate to. Micali co-invented those things that is revolutionizing cryptocurrency called zero knowledge proofs, no big deal there, and is still a professor at MIT. Now, there is no doubt that Silvo Micali is regarded as one of the greatest minds in computer science and has implemented multiple mechanisms he has invented into Algorand itself, like those zero knowledge proofs, verifiable random functions, and the consensus protocol called pure proof of stake. Now, Micali is constantly putting himself on show with frequent AMAs and interviews with high-level and technical discussions on anything blockchain, basically ticking all the boxes that are possibly even there. Now, I'll be honest, when I was listening to a fair few talks from Micali for the research section of this video, I began to fall in love with his work and ideologies, and I'm not kidding, I really did. Now, yes, of course, don't stress, this is still going to be an objective review, but I thought for those aspiring to learn more about blockchain, just go watch some of his talks on Algorand. Just trust me. Behind Mr. Micali, we have two different teams, the Algorand Foundation and Algorand Inc. The Algorand Foundation is a non-for-profit community organization that focuses inwards to further develop the protocol and create a stronger ecosystem. Now, this comes in the form of protocol governance and token dynamics, grants, and supporting grassroots and open source development. And it was the Algorand Foundation that launched the Algorand mainnet back in June 19th, 2019. Now, alternatively, Algorand Inc. is a for-profit entity that focuses more so on developing the Layer 1 protocol and enabling enterprise adoption of Algorand. That is also very important. But one thing you'll find mutual across both teams is that they are all doxed individuals, with more links associated with the foundation side of things, possibly due to the stronger ties with the ecosystem. Now, what we have here is a literal legend in cryptography supported by two amazing and notably very experienced teams, all experienced in industries related to finance, computer science, and of course, marketing. So guys, with a team as spectacular as this, we can create Algorand, aka the meme and protocol on the Flywheel. So to talk about this next part, we're gonna have to require some minor observations of technical details, but it will support the reasoning for why so many people, users, investors, validators, developers, and now apparently governments are flocking to use this seemingly ordinary blockchain. Now, for those of you who hate when I dive super deep into the technicals, do not worry. I go kinda high level on the consensus algorithm later in this chapter at the very end. But I need to ask a huge favor from every single one of you. Could you please pause the video and let me know in the comments whether you prefer the higher level breakdowns or prefer a deeper dive like I have been doing in my recent reviews. Just so you know though, the deeper I do go into the technicals, the longer the video length and the longer it does take me to create it. Now, Algorand's TPS, or transactions per second, are currently capped at around 6,000, which was recently improved with the introduction of state proofs and a 5x increase to block size from 1 megabyte like in Bitcoin to the current 5 megabytes. Now, in an article from the Algorand developer portal dated 15th of September 2022, Algorand is actually planning on increasing this number to a total of 10,000 TPS by shifting their focus to reduce round times, or in other words, just block creation via the consensus algorithm, something we will expand on very shortly. Now, the question I have is, 10,000 TPS sufficient for where blockchain technology is headed? Well, use the timestamp on the screen right now for a deeper insight later in the video. Now, the transaction fees are in the microcents. Right now, you'll be looking at pretty much paying around 10,000th of a dollar, which is just crazy. And to put that in perspective, I know words can be confusing. You can again see that on screen now. Now, of course, with demand, this number will increase. However, it should still balance out to well under $1, even with high network demand and TPS as high as 10,000. Also, it does help that the finality is so low as well. And speaking of finality, Algorand's is actually instant. Well, at least it's technically instant. Now, you could very well consider it instant because as soon as your transaction hits the network and is added into a block, you can consider it irrevocable, assuming your transaction obviously isn't nefarious, but of course there's going to be measures in place to stop that from happening in the first place. Now, the possibility of instant finality is due to the infinitesimal chance that the chain is going to be temporarily forked, which Algorand has actually claimed has less than a 1 in 1 trillion chance of actually happening. Now, if a blockchain can't fork and the block created will 100% be added to the network, then yeah, it's easy enough to say it's instant. So there you go. Now, the analogy is just like you depositing cash at your local bank branch. Now, we're gonna have to assume here that the teller is a good actor, but as soon as you hand that cash over, you've pretty much assumed it's in your account. But how is this possible? I hear you screaming. Well, stay tuned to the end of this section where I run through a high-level overview of how consensus is met. But all in all, guys, the actual time to block finality is around 3.6 to 3.9 seconds, depending. Now, just to put how fast, let's just say instant finality is, or actually let's just stick with 3.9 seconds, a Bitcoin block takes around 10 minutes to create, and it's widely acknowledged to wait at least 6 blocks after you have made a transaction to be, get this, almost certain that your transaction is successful. Now, this often means waiting around 60 minutes and even longer when transferring large sums of money. And guess what, guys? Even then, the transaction still isn't considered absolutely final. Now, the possibilities with Algorand are endless, and more importantly, offer some awesome chances for the space to move away from these centralized and dangerous exchanges that we've come to realize are so prevalent in the space, even some of the biggest actors. And guess what, guys? It would be so amazing to have full money markets on the blockchain, something only really feasible with super fast finality and of course TPS. Now, if you think about it for a second, even Visa and MasterCard don't have instant finality on your transactions. That's usually why they pen for a day or two. Also, Algorand hosts its own virtual machine, the AVM, which is to be run by every single node in the network. Now, the AVM supports layer 2 applications using smart contracts developed in 2 languages, Python and Reach. And developers can also use one of 4 common SDKs, either Python, JavaScript, Golang, and Java to connect with on-chain assets or applications. So it is super dev friendly and won't require sudden learning curves for these builders. Now, on top of this, Algorand is super unique in the fact that it allows decentralized applications to be implemented into the layer 1 of the blockchain. Yes, you heard me right, into the layer 1. Not just as a smart contract on the layer 2. This allows for the generation of new types of fungible and non-fungible tokens and the execution of atomic multi-party transfers. But what does all this mean? Well, at the layer 1, blockchains are mainly concerned with basic payments, consensus, storage, and hardware. Pretty basic, yet integral for the whole network. Now, layer 2 applications usually focus on building diverse applications that are not directly correlated with the layer 1, and Algorand allowing projects to implement core functionalities at layer 1 offers one of 3 prominent benefits. Now, the first being, of course, security. Anytime a dApp is embedded into the layer 1, they receive the highest level of security, which of course is the consensus protocol itself. Now, the attack angles are mitigated to the same degree that they would be for the Algorand protocol, meaning financial and government applications can actually be adopted in this case. Now, the second is compatibility. Now, seeing as there is often compatibility issues between smart contracts built on the same network, Layer 1 dApps that are built into the software of Algorand guarantees absolute compatibility and interoperability between other Layer 1 dApps and, of course, Algorand itself. Now, Algorand actually sums this up well by stating if 2 users use the same Layer 1 implementation to launch their own fungible tokens, then an application developed for one token will also work for the other. Now, by contrast, if 2 users launch their fungible tokens via 2 separately designed smart contracts, the 2 implementations may differ in very subtle ways, and a dApp correctly designed for one may fail to work for the other. But also, I would be lying if I left it just there. This mainly has to do with a special type of token called an ASA, which we're going to talk about more in just a second. Now, the third is efficiency. The most obvious benefit from being implemented in the Layer 1 is that these dApps will be able to obviously take advantage from the performance-based functions. Things like computation, storage, and of course, communication. Now, on the contrary, Layer 2 applications rely on virtual machines, which can and often do result in additional costs and of course, complexities. Now, I know what some of you might be thinking.
Why the hell would they offer a layer 2 then?
Well, I think Algorand also sums this up beautifully. Not all new features are suitable for Layer 1 implementation. In particular, any features implemented in the Layer 1 must not significantly slow down the consensus protocol, should be important enough to merit such prominence in the platform, and should be designed in a way that simplifies checking their correctness. And if you're thinking what I'm thinking, well, the Algorand Foundation would have to make that call. As a side note, Algorand has stated that they plan to bring more functionalities to these Layer 1 dApps with a set of templates that will actually capture many more functions that currently require general purpose smart contracts. Now, each one of these templates will carefully be designed, of course, and they're going to be highly optimizable. If you'd like to learn more about Algorand's Layer 1 strategy and atomic multi-party transfers, which I unfortunately didn't have time to discuss, then check out the article explaining Algorand's Layer 1 strategies in the description. Also guys, Algorand is carbon negative as of April 2022. Silvo Micali designed PPoS to be as clean as possible, which means Algorand has produced an extremely low carbon footprint over the years of operation. However, this doesn't quite get to carbon negative status. Due to partnerships and internal culture, Algorand initially reached carbon neutral status by partnering with an organization called Climate Trade, which helps companies and entities meet their sustainability goals by offsetting CO2 emissions and sponsoring climate change projects. Now, initially, Algorand worked with climate change projects through Climate Trade to offset the already low footprint left by the network, which are the following initiatives I shamefully cannot pronounce on your screen now. Now, this gave Algorand carbon neutral status, but to reach carbon negative status, Algorand again had to partner with Climate Trade to implement a sustainability oracle that tracks and records Algorand's carbon footprint on the chain per epoch. Now, after an epoch, Algorand will assess the carbon it has emitted based on the quantity of candidates in each round and lock the corresponding quantity of carbon credits as an ASA into the so-called green treasury so that the protocol can now be considered fully carbon negative. So to sum that up, basically they just buy carbon credits based on how many nodes were working on consensus in each epoch. Now, if those words have confused you or that doesn't make any sense to you, I urge you just to stay tuned for the PPoS explanation at the end of this chapter. And guys, guess what? As a fun little fact, Algorand only uses around 0. This many more zeros, 4 kilograms of CO2 per final transaction. Now contrast to Bitcoin, and we're looking at 338 tons. Yes, 338 fucking tons per transaction. Speaking of ASA, it's Algorand's version of a universal token with some awesome capabilities. ASA, or Algorand Standard Assets, works kind of somewhat similarly to Ethereum's ERC-1155 standard token in the sense that it can support more than one asset type, but that's pretty much where their similarities kind of trace off. ASAs offer far more capabilities than what any other token can, at least that I know of. And they're designed to be flexible to accommodate any asset looking to use the Algorand blockchain, from small to large businesses and compliance bodies to decentralized applications and NFTs. Now, all can be programmed with various levels of regulations, terms, conditions, and specifications, or of course, lack thereof. And by doing so, Algorand has been able to partner with ISDA, which is the International Swaps and Derivatives Association, to explore how their common domain model can be implemented into Algorand. Now, if we're going to get a bit technical here, ASAs provide a standardized layer 1 mechanism to represent any type of asset on the Algorand blockchain. So this pretty much means developers won't have to scramble to find a suitable token to match their needs, face any issues, or be limited to one type of token, and can therefore let their imaginations run wild. I'd like to mention some of the key differences between ASAs and other network tokens, just so you know how important this actually is. Now, firstly, ASAs are incredibly fast and secure as they're built directly into Algorand's Layer 1. They're actually low cost to execute due to Algorand's, of course, extremely cheap fees, simple issuance for developers and enterprises, as I have mentioned, and they are universal across all assets issued on Algorand, meaning all dApps use the same token and can therefore interoperate seamlessly. Just think of one coherent ecosystem. On the screen now are some examples of asset types that can be created from ASAs. And again, there's no need for multiple tokens and no need for overcomplicated communication between assets. You'll also notice that it's perfect for restricted fungible and non-fungible tokens, capable of sustaining securities, government-issued fiat like CBDCs, and of course, real estate. Now, there's a lot more information here that I would love to share, but I just don't have the time to do so. So if you're interested in reading a short 2-page document on ASAs, then of course, check out the description. And finally, Algorand has created its own version of proof of stake called Pure Proof of Stake. Now, Pure Proof of Stake secures a network by way of monetary value, meaning security is imposed by the entire network economy, not by a centralized count of nodes or mining pools. As long as more than 2/3 of the network's monetary value is held by good actors, then the protocol is secure and can continue to operate without forks or double spending. And this is all possible with a protocol implemented within pure proof of stake called the Byzantine Agreement Protocol, or BA for short. Now, it's not the same as the more common types of Byzantine fault tolerance protocol most of you are probably familiar with, or at least know off the top of your brain, but it instead ensures that an agreement on consensus occurs at scale, randomly, and with an emphasis on the user's weight.
Told you not to mention his weight.
As I've mentioned, BA is a lot more scalable than Byzantine fault-tolerant protocols. It scales with the number of network users and doesn't rely on a fixed number like you'd find in other BFT projects that use delegated or bonding proof of stake. Now, if you think about it, and kind of like I started this video, taking a larger sample is always preferred over a smaller one. Let's just say you take 1,000 people and ask them how many are lactose intolerant. There's a probably pretty good chance 10% might raise their hand. Now, on the contrary, if you, I don't know, say survey 10 people, there's going to be a really, really good chance, or at least a better chance, that they all might raise their hands. Now, just imagine that as nodes and adversaries in a group committee. As of the 16th of November 2022, there are around 2,834 active nodes on the network, with about 257 participating in consensus at least once in the last 7 days, which is almost 10% of the active node count. Now, as the network grows in size, there is always an increased risk that higher than the perceived active adversaries are present in a smaller sample, which would bring down the network, even though there might only be 10% instead of, I don't know, 33%. Now, of course, even if they don't control more than 1/3, that is pretty scary to think of. Now, this is literally completely abolished with BA. Economically speaking, this is quite effective because adversaries would then have to absolutely control 1/3 of the network's monetary value, and there is pretty much no way around it. But even if they could, and let's just say they can, it would effectively diminish the currency's purchasing power and therefore devalue the asset, meaning there's no real incentive to do so. Controlling 33% of the network's capital would mean expending hundreds of millions, probably billions, and in Algorand's hopeful future, even trillions of dollars. And when it's time to sell out, you're stuck with an asset that's basically worthless. The way Algorand can allow PPoS to function in this way is by allowing any user to participate in consensus, no matter the hardware. Like, I mean, literally, even someone using one of these things can actually participate. It's these type of participants that are called participation nodes, which we'll go over later in the video. But as I said, anyone can become a participation node. And as a matter of fact, Algorand, as well as the founder, are outspoken in the idea of pushing as many people to strengthen the network by at least becoming a participation node. You don't have to stake your tokens, they aren't locked away, and the software can be run on a decade-old computer, so there's quite a lot of flexibility here. Now, as a participation node, you are allowed to participate in consensus by either voting or proposing new blocks to the network. All you need to do is download the software, generate a special key called a participation key with your private key, which is what you will vote with, and off you go, have fun. However, it's not your choice on whether you are to participate in the consensus round. The network will choose you by way of randomization. It does this as each preceding block generates what's called a selection seed that determines which users are to participate in the next round of the consensus. Now, when a new block is committed to the blockchain, this seed is also propagated to the entire network, of course, just like any block would, so everyone can see it. Now, this is where an algorithm called Verified Random Functions, or VRF for short, comes into the equation. Every participation node on the network will secretly and locally check whether they are a participant in that round by pretty much computing their participation node with the VRF and that selection seed. Now, only those who are chosen will know they have been picked, as this requires certification, of course, from the user's private key. Again, something unique to every single node. Now, this is super important as an adversary will not know who the participants of the next round are because there is no communicating here, only local computation. Now, when a node is chosen, the VRF will produce a pseudo-random output with a cryptographic proof so that anyone can verify that the node was chosen for that task. Now, this is an important mechanism I want you all to remember. The randomized selection is evaluated based on how many algo tokens a participation node holds in his or her wallet, and each algo token can be understood as a basic lottery type ticket. The more lottery tickets you have, obviously the higher chance you have of winning the lottery, aka pretty much you're more likely to be chosen to participate in that consensus round. In consensus, you'll be called upon to do one of two things. You'll either be called upon to verify a block producer's block, which Algorand calls a verifier, or you'll be called upon to create a block as a block producer. Now, you'll only, of course, figure this out by computing that selection seed. It doesn't matter what's required of you though, because computations are trivial as everything can be computed using simple cryptography and multiplication, with bandwidth pretty much requiring limited use because you only need to send and receive very simple messages if you are selected for consensus. Now, what I really like about this is that everything a node does on the consensus side of the protocol is always signed with the participation key, not your spending keys. And this was a nice addition by Algorand to prevent a total loss of funds if your account was compromised on the network or transactional side of things, because your private key is the same for both. Now that I've explained the general details, let's quickly run through how consensus is met. Now this is going to be a 3-step phase, starting with the block proposal, then moving into what's called soft voting, and finishing with certified voting. And I promise I'll try to be quick. Now, first of all, the selection seed identifies an unspecified and random amount of accounts to propose new blocks to the network. Now, if you're wondering why, I don't know, one block producer isn't chosen, it's simply because the network cannot risk the chance that that one particular node is offline, or even worse, malicious. And if it were, this would obviously slow the progress down, slow down consensus, and it could pretty much destroy the network altogether. Now, from here, every node in the network will run the VRF to identify if they are someone that was chosen for this role in this round. Now, let's just say there were 10 block producers chosen in this round for simplicity's sake. So what would happen is these 10 nodes would then propagate their proposed block along with the cryptographic proof to prove that they were indeed chosen to all the nodes in the network. Now, since propagation can happen extremely quickly, as we should probably all know by now, other nodes will receive these blocks and proof, run their own VRFs, and prove that these 10 nodes are valid producers. Still with me? Sweet. Now, the next step for the protocol is to find the soft vote committee, so it's step 2. Now, these guys are a group of nodes that are found in the same way that the block producers were, by, you know, running the VRF and participation key against the selection seed. And when the nodes are chosen to be a soft vote committee member, they will have to take all 10 blocks from the different block producers and decide on which one they're going to choose to commit to the blockchain. Remember, only one will win. Now, the number of nodes in the soft vote committee will always be an arbitrary one, always relative to the number of nodes in the network. Now, akin to the example earlier, if there are 100,000 nodes in the network, this might be 1,000 nodes, whereas if the network had 1,000 nodes, this might only be 10, just as an example. Anyway, so another reason you'd want to own more algo tokens is if you were chosen in this circumstance. The more you own, the stronger your vote in this committee. Now, this is what is referred to as having a weighted vote.
Didn't call him Blob, I said Bub.
Now, the first thing the members of the soft vote committee do is individually decide on a block based on the lowest VRF block proposal calculated at the timeout of this process. Now, once this is complete, the block will be sent out to the other nodes in the committee along with the VRF proof of each member, just to make sure they are who they say they are. Now, each node in this committee will validate the committee membership VRF of their neighboring members before adding their vote to the tally. Now, once the tallies have been counted and the majority has reached agreement on a single block, the process moves to the last step, certified vote. Now, in this step, the new committee is formed through the same process to check the block proposal that the soft vote committee voted on. Now, this committee is looking for things like overspending, double spending, or any other issues that may have arisen. Now, this last step will basically be the exact same as the soft vote step, so I'm not going to bore you with those finer details again. Once the votes have been collected and validated by each of the certified committee members, the round is officially complete, prompting the node that created the block to certify it and write it off to the ledger. It's at that point that this whole process starts over again. You could say pretty fast for 3.9 seconds if you ask me.
That's what she said.
As crazy as this process sounds and how unbelievable it is to jam all of that into only 3.9 and sometimes even 3.6 seconds, and of course, guys, we can thank the BA and VRF protocols for that, Algorand must be doing something right, because believe it or not, the network has had absolutely this much downtime, that will look like 6, since it launched way back in June of 2019. Now look, if you're someone who loves hearing about these kind of in-depth breakdowns, I need to hear your voice down below so I can continue adding deeper technical dives into these reviews. I'm going to admit, guys, it takes quite a while to break down the technicals and repackage them into these videos into such a high level as I possibly can. So if this isn't something you enjoy watching, I really do need your feedback, even if it's just a quick little comment, even if you're going to comment something already. If you don't want to see more of these technical breakdowns, then there's no worries at all. It's less work for me. Anyway, if you stuck with me through that, then you're what we call in Australia a true bloody legend. Moving back to the Flywheel, as you can see, we've now ticked the meme and protocol. The meme being the insanely awesome features I've just spent the last 15 or so minutes discussing with you. Now, the investors are some of the best, but seeing as time is flying by, I'm going to leave them just on screen now. And the ones that are blue are pretty much, in my opinion, the S tier ones out of the list. With a combination of a solid team, protocol, meme and investors, we can now begin bringing miners and validators into the mix, creating platform functionality for developers. We do this with the introduction of 2 specific types of nodes. Now, the first you should all be accustomed to by now, and that is the participation nodes. These are the nodes that anyone can easily opt into right now. They're connected to much fewer nodes because they are only allowed to communicate to the relay nodes, not to each other. Now, these nodes represent a user's value in the network and hold participation keys formed from a user's private key that they use to sign off on blocks, votes, and proofs, which we've all discussed previously. Now, they do not have to stake any tokens in the network, but are weighted depending on how many tokens they do hold during consensus. Basically, they propose and vote on blocks. Now, participation nodes can opt to synchronize to the 1,000 most recent blocks in the network for what's called a fast catch-up, just in case I didn't want to download the whole entire blockchain. Now, the second are called relay nodes. Now, the relay nodes are essentially the backbone of the Algorand protocol. These guys are the nodes that will require high bandwidth connections, beefy computers, and are ideally located at internet exchange points to decrease propagation times. Now, these nodes connect to hundreds and in the future probably thousands of other relay and participation nodes so they can communicate with one another, sending out important protocol messages like signature checks, validation steps, and performing deduplication. Basically, they allow for the highly efficient communication pathways. It's important to note that these nodes are not involved in protocol consensus and are purely the backbone that enables the system to operate decentrally. Now, as of today, which is November the 16th, 2022, there are around 2,834 relay and participation nodes on the network, with a large majority of that number consisting of the participation nodes. Now, if we consider a network like Bitcoin with around 15,000 nodes, Algorand is quite up there considering it's around 300 times smaller in terms of market cap, yet only has around 6.5 times fewer nodes. Now, I would even argue that Algorand would see an exponential curve in node count as it's designed to be more accommodating for anyone to spin up a participation node, but we'll have to see in the years to come. Bitcoin also has a flawed security structure at scale. Now, check out this chart that displays the hash rate of each mining pool. Literally, guys, 4 pools control 78.5% of the total hash rate. Now, that's something that could literally take the network down if only 3 of the 4 decided to collude against everyone. I know I'm picking on a blockchain that is completely different from Algorand. However, this is to get my point across. And honestly, I don't want to offend a community where we actually know who the founders and the team are, because let's face it, guys, I might want to review them in the future and don't want to start beef. At least we don't know who Satoshi actually is. Now, Algorand is primed to scale security and decentralization with adoption, something that most other protocols seriously lack. Now, other POS protocols have the same security issues as Bitcoin does at scale. They just wrap it in the idea that, oh, we're delegated proof of stake, but they kind of fail to realize that it's also an attack vector. They sound great, but they can't actually address the same scalability issues that Algorand can, and Silvo Micali knows this. My only scalability concern with Algorand is the TPS, but again, we're going to get to that in just a sec. Now, if we're going to steer back on track really quickly, we now have platform functionality since we have a working protocol thanks to those nodes. It's now time for the ecosystem to grow by incentivizing third-party developers to deploy their decentralized applications onto the L1, or as smart contracts do on the L2. Now, there are a lot of things to discuss around the ecosystem, but I think starting at the ecosystem overview is the most obvious first foot forward. Now, as you can see, it's looking quite packed. Now, this chart was updated as of the September 2022, which increased by over 50 projects as a result of the recent update that took Algorand's TPS from 1,200 to 6,000. Now, not every asset and asset class is listed on this chart because obviously this would crowd the page significantly or literally be impossible. So to view the total list of dApps, you can scroll and sort on this page here. With a total of 505 decentralized applications built on Algorand, joining this ecosystem would be a no-brainer for a project wanting to interoperate with any of these cryptocurrencies, because remember, ASAs allow for seamless integration with every other asset on the network. Now, one of the factors the ecosystem is so large is probably because of the $300 million ecosystem funding round that was announced in September of last year that spawned a plethora of interesting dApps to be built on or integrated with Algorand. Now, this obviously piqued a lot of developers' interest, not just because of the large sum of money they could receive through these things called super grants, but because Algorand actually has a scalable base that is public and permissionless with top tier security. Now, if we take a look at the ecosystem back in February of 2022, we can see the drastic difference something like this plays into an ecosystem and why so many other layer 1 networks are choosing to germinate an ecosystem in this way. Now, time for some more recent news. Algorand partnered with FIFA back in May of 2022, you know, the Football Association. Now, it's actually been awarded the official blockchain platform of FIFA and provides the official blockchain supported wallet solution. But what does this entail? Well, it means that Algorand will assist FIFA in developing its digital asset strategy, which has already commenced as a non-fungible NFT collection called FIFA Plus Connect. Now, the association has hinted that this is to be one of many future collections, and it wouldn't surprise me if there was a fungible asset in the making as well. Now, on FIFA's side of the deal, they are to promote Algorand via advertising, media exposure, and other promotional opportunities, one of which being a regional supporter for North America and Europe in the 2022 FIFA World Cup in Qatar for the males and Australia and New Zealand for the female competitors. Now, if it isn't obvious enough, this will be an amazing promotion for Algorand as a genuine blockchain solution. Let's just forget retail investors for a second. Huge companies and even nations will be looking at this partnership and consider Algorand as a platform to host their digital token ideas. Now, speaking of amazing promotions, Australia Zoo, one of the most renowned zoos in the world, has also partnered with Algorand to launch its own NFT collection named Wildlife Warriors. Now, what's the reason, you might be asking? Well, because Algorand is a carbon negative blockchain focusing on conservation and protecting the environment, something, of course, Australia Zoo is extremely passionate about as well. Now, there's other things worth noting as well, like the integration with the Wormhole Bridge back in May, which I don't honestly see as overly bullish considering the huge risk with it and, well, Solana, or that it's working with the ISDA like I mentioned before. But one of the biggest rumors is that Algorand is ISO 20022 compliant and is being considered among other cryptocurrencies as one of the blockchains that will host this new standard. Now, for those wondering, ISO 20022 is the new standard for electronic data interchange between financial institutions and central banks. So, set to begin operations actually this month, November 2022, and will be fully integrated come November 2025. If I'm just going to dumb that down for a second, ISO 20022 is basically replacing SWIFT, and governments as well as financial institutions are looking for someone to host such a standard. Now, I'll be honest for a second. Algorand would be perfect as it scales security and decentralization really well together, as well as ASAs being the perfect token for such a thing. Now, whether they implement Algorand as a standalone blockchain for this job or use it in combination with other chains like the previous topology map that I illustrated on screen, I'm not too sure. However, these are apparently rumors debunked in a recent interview between JT Invests in You and the CEO of Algorand Foundation, Stacey Warden.
The global financial messaging standards have been evolving over the years, and the European and American central banks have signaled that November of this year being the go-live date for the new standard ISO 20022, in which Algo is one of the 5 cryptos reported to be compliant with this new standard. How will this change affect Algorand, if at all?
Yeah, you know, the most important words in that question are reported to, because like we don't know where that came from. Honestly, that is my honest answer for that. And you're not wrong. I mean, it's like on the internet that we are part of it. We don't know where that came from.
So I'm not entirely sure where these rumors have popped up. Possibly from articles like this where they mention that coins like Hedera, Ripple, Quant, IOTA, Stellar, and XDC, as well as of course Algorand, are also compliant. But I mean, all we can do at this stage is take it with a grain of salt. Now, if you're a fan of Algorand like myself, keep a keen eye on their Twitter and make sure that if this news is confirmed, you're prepared or even already exposed. And this leads me to my TPS issue. Algorand is slow. It just is. Now, compared to a lot of other blockchains right now, yeah, I guess it's probably kind of up there. But guys, I mean, come on. For what it's promoting and where it wants to go, I mean, it's absurdly slow, like seriously slow. Now, as I said before, I mean, I love Algorand just as much as most of you, but this is a seriously slow blockchain considering it plans to host, you know, CBDCs, financial markets, DeFi, NFTs, and obviously a hell of a lot more. Now, it's been theorized that Algorand can reach speeds of up to 46,000 TPS with some tweaks and improvements. But even at that speed, I mean, we're talking less than a 20th of what it would take to host all the equity markets like the NASDAQ and the New York Stock Exchange, just to name 2. Now, if we're going to end where we kind of started, I have complete faith that Algorand can and will tackle that hurdle when the time does come, because they have one of, and arguably the best minds in cryptography leading this project. Now, if Silvo Micali can bring us ZKPs, then he can damn sure find a way to scale TPS to such a size. Although first, Algorand needs to reach speeds to compete with that of Visa and MasterCard. As they say, guys, and I want to shout this for everyone in the back, Rome was not built in a day. It's okay if they don't have all this right now. Now, completing the flywheel, we come back around to useful applications being made, which we have established, and therefore utility is provided to the end user. Now, if you can remember, an increasing volume of new wallet addresses and social interactions is one way to track things are working correctly. Now, with social engagement in purple and the price in pink, we can see that Algorand began to pick up some traction in September of 2021 when the ecosystem funding round was announced, and so too the TPS boost. Now, from there, Algorand's price and social engagement have basically mirrored each other until recently when the social engagement finally overcame price, which is great to see. Now, this could mean Algorand is becoming more and more popular regardless of price or market sentiment, something we would obviously want to see with real-world adoption. Not only that, but new addresses and importantly active addresses are beginning to see an uptick as well. Now, you can't quite see it here because the price warps the ratios. However, you need to trust me here or just slow the video down and eyeball the blue and green dots as I slide through. Now, of course, some days are going to be slower than others, but for the most part, we are trending upwards. Overall, everyone, my opinion on Algorand is quality, quality, quality. I give her a full 10 out of 10, and I wouldn't rate her down for TPS, as this is something I know a team as strong as this will definitely overcome when the time is there. If you pay close attention to the work and videos Silvo Micali produces, the man is committed to blockchains remaining as green as possible while also promoting their desired task. And that is, of course, onboarding new borderless economy capable of reaching every corner of the globe. Now, Algorand is also ESG compliant, which I unfortunately didn't have enough time to go into. And all the signs, in my opinion, are leading to a prosperous future. Now, to keep this nice and simple, my price prediction for January 2025 will work off these 3 variables. 1, we can expect another 1.2 billion algo to enter circulation by then. 2, the highest market cap algo reached at the peak of the 2021 bull market was $14.3 billion. And 3, the circulating supply back then was around 7 billion algo. Now, I'm going to assume that there would be somewhat mild adoption at that point, yet for sure more than the previous bull market. So my best guess would be a conservative $4 to $5, which I would see being a lot higher if demand does indeed increase through the means of ISO or other avenues. Anything can happen. Hell, it could even be $10, $15 for all the hell I know. So stay tuned and listen for those important updates and announcements. Either way, guys, that'll do it for this video. I would really appreciate a like for all the time that has gone into this video. And of course, stay tuned for more like it. Until then, everyone, thanks a lot.